You may or may not be aware, but there is a huge problem with long-term care in this country, and that's what we're going to talk about today. Now, the reason that this topic gets me so hot and bothered is because 7 or 8 years ago, my parents received premium increase notices on their long-term care policies that I had sold them a long while back. And those premium increases totaled a 270% premium increase on their 2 long-term care policies that had an inflation protection rider on it. And I don't need to tell you that a 270% increase on an insurance premium contract is out of control and not sustainable. I literally stopped selling traditional long-term care policies that day, because as a financial planner who's trying to do the best thing for my clients, how in the world can I recommend a traditional long-term care policy that you have to actually use or you lose? It's similar to a term insurance policy. Either you die or it expires worthless. Well, traditional long-term care, for the most part, is the same. You either use the long-term care benefit, and about half of people age 65 or older are expected to use some form of long-term care type coverage. You either use it or all those premiums you paid for all those years just go away. Now, that's not the end of the world if your premiums are guaranteed, but if your premiums are going to increase by 270%, or even if it's 50%, 100%, well, now you have a product that's use it or lose it, and you have no guarantee on your premiums. And if you don't pay the premium increase, they start clawing back your benefits. That is a losing situation. And so for the last 7 or 8 years, I've kind of been on the warpath looking for a better way to solve the problem of long-term care. Now, a couple of weeks ago, we did a video for clients who are actually unable to qualify for long-term care coverage because of health-related issues. And if that's you, I would encourage you to check out that video. We'll link it up above. And it mainly has to do with long-term care type coverage that doesn't require medical underwriting. And so that's useful if you can't qualify for long-term care. Today, we're going to be talking about those of you that are still healthy and can qualify for long-term care. How are you going to do this? And maybe what's a good situation or a good potential solution moving forward, knowing that the traditional long-term care policies are slowly becoming non-existent. First, let's start with why is this a problem? I mentioned before, about 50% of adults over age 65 are expected to go into some type of assisted living, nursing home facility or receive home care. And I've got an article here that I'll share with you. This is from Northwestern Mutual. How much does long-term care cost? And let's just read it. The cost of covering long-term care can vary greatly. It's mainly going to depend on where you live and obviously how long you stay in. But according to their 2020 cost of care study, a home health aide or certified healthcare worker averages $26 an hour. At a full-time rate, that could be more than $75,000 per year. Meanwhile, the average price for a 1-bedroom apartment in a assisted living facility is $4,800 a month or $57,000 per year. And private rooms in nursing home average $113,000 a year. And I can tell you from personal experience, this is absolutely true. In fact, we have some clients that came into the office several weeks ago. They're paying $10,000 a month for care. $10,000 a month for care. Now, we're in the Atlanta area, so the cost of care is a little bit higher than maybe if you're in a rural, remote area, but still $10,000 a month for the cost of care. It's outrageous. Now, if you're well off, the traditional thinking for a long period of time has been, well, I'll just self-insure. If I need it, I will use my assets to pay for it. But at $10,000 a month, there's got to be a better way. So you've got costs ranging from $50,000 to over $100,000 a year for long-term care. Couple that with the fact that the premiums on traditional long-term care insurance are not guaranteed. Here's another article. This is from the NAIC. We'll probably put a link to this below in the show notes. That way you can read it if you'd like to. It's a long article on long-term care. It's 52 pages long, but I pulled this on the rate increases. Rate increases on traditional standalone long-term care insurance policies. So this is a report from 2021. I believe this article was written 2022. A report of long-term care insurance data from 2021 described more than 3,500 approved rate increases nationwide. 3,500 approved rate increases nationwide. Now, that's not 3,500 individuals that experienced a rate increase. That's 3,500 instances of a company asking for a rate increase on an entire block of business or an entire demographic of people. Because when they apply for rate increases, they'll say, we need to increase the rates on all of our 67-year-old traditional long-term care policyholders who have the inflation protection rider on their policy. And so that could apply to 10,000 people, 20,000 people. So 3,500 approved rate increases nationwide for long-term care insurance policies. The average single requested rate increase was 78%. So companies are requesting on average a 78% increase in their premiums. The average single approved rate increase was 37%. So that means the insurance state commissioner said, well, I know you want a 78% increase. We're not going to give you 78. The average approved was 37%. The average cumulative approved rate increase was 112%. What that means is these companies are requesting more than one rate increase. So they go in and they say, we need a 78% rate increase. And the state insurance commissioner says, no, we'll give you 37. And they say, okay, we'll take the 37% increase. And then 3 months later, they come back and they say, we need a 78% increase. And they say, no, you can have 37. And they do that 3 times, getting you to the 112%. Okay, so it's not like once they get rejected, they just give up. They take their ball and they go home. No, they continually ask for rate increases. The average cumulative approved rate increase was 112%. Wild. Of the in-force policies in the most rate increase blocks, more than 70% had the inflation rider on there. That is where most of these rate increases are coming from. And that's really the most important part of the policy because the cost of long-term care is increasing faster than the rate of inflation. And so if you don't have the inflation rider on there, yes, you can get a policy today, but what's $100 a day in benefit going to do 15 years from now if the daily need is $600 a day? I mean, it covers something, but you need those inflation protection riders on there. Otherwise, you're not getting much firepower out of these policies. So you get that 112% rate increase if you have a long-term care policy, and they'll send out a letter and they'll say, here's the deal. You can pay this 112% rate increase, in my parents' case, 270%, or you can simply reduce your benefits for the same premium. And so what they'll do is they'll say, well, we can drop your daily benefit. We can decrease the benefit period or decrease the maximum benefit pool, or you can take the inflation protection rider off of your policy. So you can either pay this rate increase or we can start clawing back provisions that you thought that you had. Not an ideal situation. Maybe this should go at the beginning. I don't know. I just did a quick Google search on the topic of long-term care costs, and there are tons of articles. I've put some of them up here for us to look at. One, dying broke, facing financial ruin as costs soar for elder care. The long-term care crisis, why few can afford to grow old in America. This is from December of 2023. We've got a CNN business article. More than half of older Americans will need long-term care. Many can't afford the rising cost. Dying broke, a new jointly reported series on America's long-term care crisis from KFF Health News. Series examines the ways in which the financial and emotional toll of providing and paying for long-term care are wreaking havoc on the lives of millions of Americans. One more, financial ruin is baked into the system. Readers on the costs of long-term care. Thousands of people share their experiences, basically, as related to this Dying Broke series. So this is a huge issue in this country. And unfortunately, there's not a lot of really good ways to solve this problem. So what can you do about this? Long-term care costs are skyrocketing. More than half of Americans are going to need long-term care at some point in their lives. A typical stay is going to look like 1 to 2 years of home health care, 1 to 2 years of assisted living, and then 1 to 2 years of basically a private nursing room. And that's crazy expensive. I mean, you're talking anywhere from 3 to 5, 6, 7 years of paying anywhere from $5,000 to $10,000 per month for these services. And if you have something like dementia, Some people end up in a long-term care facility for 10 or 15 years, which is almost impossible to overcome from a planning perspective. So what can you do about it? Well, I'll mention briefly again, if you are not able to qualify for long-term care, you need to see the other video that we did on some long-term care solutions that don't require you to currently be able to get life insurance or long-term care insurance. There's no health exams. So check that out. Again, we'll put that up above. If you are still healthy and you can qualify for long-term care, what we have been doing here at Leveraged Wealth, because we are allergic to the idea of premium increases, we have been taking sideline money, lazy money, checking account money, and we've been doing single premium long-term care policies. The reason we've been doing single premium long-term care policies is, a couple reasons. Number one, we have guaranteed benefits and guaranteed premiums. We know exactly what we have to pay. We know exactly what the benefit's going to be, and there's no questions. There's no premium increases. That's number one. Number two, it is a single premium, which means we have clients putting in $50,000 to $200,000 in one go into these policies. And so that's a lot of money to be putting into a long-term care policy. But the good part of this single premium long-term care process is most companies are going to give you some kind of return of premium option. So if you get into a spot where you need the money back, a lot of them will allow you to take the money back, no questions asked. There may be a waiting period, 4 to 5 years. You may be able to get 70% of your premium back or 90%. Some offer all of it back with a longer wait period. But at some point, if you need the money back, you can get it back. The third reason we really love it is because it's not use it or lose it. All of these policies have a death benefit. So you put in $100,000, maybe that $100,000 leverages up for a $400,000 benefit pool for long-term care. And if you never go into a facility, you probably have something like a $150,000 death benefit that pays to your beneficiaries. So we have guaranteed premiums, guaranteed benefit pool, return of premium options, and a death benefit. We've basically solved all the issues with traditional long-term care except inflation protection. And inflation protection is just something that we're not going to be able to get, at least not in a way that's going to fully satisfy the need. There are some policies that offer inflation protection, but it's difficult to get one that will fully satisfy a 6 or a 7 year long-term care need with the premiums being guaranteed. So that's the one drawback. But in terms of solving a problem that currently is wrecking people financially, that's how we've decided to go about solving the long-term care problem. It's not perfect, but it's about the best we can do without subjecting our clients to 100% premium increases. If this is something that you'd like to explore, there's a few things that I can offer you. Number one, Genworth has a great cost of care microsite built around long-term care. You can look at the city that you're in, the state that you're in, assisted living, home care, private nursing home, and it'll give you cost estimates for all of that based on your area. It's super helpful. It also bakes in inflation. So you can say, what would the cost of care be in 5 or 10 years down the road? Super helpful. Number two, if you'd like to chat about these different solutions, maybe you're not currently healthy and can't qualify for long-term care, we have a solution for you. Maybe you are healthy and you can qualify for long-term care. We have a solution for you. Go to our website, leveragedwm.com. Up at the top, you'll see book a meeting. You can chat with us. We'll learn a little bit about your situation and what you're trying to achieve, and then show you the different solutions that are out there and let you make a decision with your dollars. It's your hard-earned money. We want you to be educated and armed with enough information to make a decision that you feel great about. But one thing is for certain, at some point, nearly everyone is going to have to deal with the problem of long-term care. There's not a lot of good ways to deal with it, but we have a few. So please lean on us and our expertise. We'd love to help you out. Until next time, take care.